Welcome back to Crypto Analysis Lab. Let me start with something uncomfortable, something most traders don't like to hear but absolutely need to. Most traders who blow accounts are not clueless. They're not lazy. And very often their analysis is correct. So the real question is not why traders lose. The real question is, why do traders still blow accounts even when their analysis is good? This is one of the hardest truths to accept in trading, because it feels logical to believe that better analysis equals to better results, more knowledge equals to more profits, being right more often equals to long-term success. But trading doesn't work like that. Markets don't reward correctness. They reward process. And most traders don't lose because they don't know what the market will do. They lose because they don't know how to operate inside uncertainty. Here's the mistake almost everyone makes. They believe analysis is the job. They believe the chart is the decision maker. But analysis is only one small component of a much larger system. Analysis answers what might happen. It does not answer how much to risk, when to step aside, how to survive drawdowns, how to behave when probability turns against you. Good analysis without structure is like a powerful engine with no brakes. This is where things get really tricky. When traders are often right, they start to trust themselves more. They increase size, they relax rules, they push limits, and the market eventually reminds them that probability doesn't care about confidence. Most blown accounts are not destroyed in chaos. They are destroyed in periods of perceived control. One good read, one big win, one decision to risk more than usual. And suddenly, a normal losing sequence becomes catastrophic. Professionals don't rely on analysis to protect them. They rely on structure. Structure means predefined risk, predefined behavior, predefined limits, predefined responses. It removes discretion when discretion is dangerous. Retail traders often say, "I trust my analysis." Professionals say, "I don't trust myself under pressure, so I build systems." That difference alone explains most blown accounts. This is not about fear or greed. It's about exposure. When your risk is too high, your emotions will override your logic. Not because you're weak, but because your nervous system is doing its job. Good analysis cannot survive inside a structure that creates constant stress. That's why psychology advice fails when structure is missing. Here's the realization that changes everything. Your job is not to prove that your analysis is correct. Your job is to build a process that survives being wrong. Analysis is input. Execution is the job. And survival is the requirement. Once you understand this, trading stops feeling chaotic and starts feeling manageable. Most traders don't blow accounts because they lack insight. They blow accounts because they operate without structure. Good analysis is valuable, but without risk control, execution rules, and behavioral constraints, it's incomplete. If this video helped you understand why past blowups weren't about intelligence or effort, you're making progress. If you want to see how analysis fits into a complete, structured trading framework, you can explore the full program here at cryptoanalysislab.com. In the next video, we'll talk about why trading psychology is not motivation, but its structure, and why that distinction matters more than anything else.